Hello and welcome to another update video on Bitcoin. It is, it's Fed day, Fed day. So today, interest rate decision, there will likely be a lot of volatility. I just want to give you a quick update because we might not see much movement until we have that rate decision. The price at the moment is caught just below that resistance area I shared with you yesterday. It's between $113,530 and $113,919. This is our nearest resistance area. And you know this already if you watched the last video. So basically today all eyes need to be on this micro resistance area. Now you can see that this pullback that started on Monday in this three-wave decline could be complete. Right, so we talked about it already yesterday. We had a three-wave move down, a so-called, just an A wave in this correction. This is the first leg down in such a correction. Then we had the B wave bounce, and then a C wave decline. 1, 2, 3, 4, 5. And this C wave decline is possibly completing this entire correction. I mean, there's always a scope for it to turn into a larger correction, which is why we have this support area here, yeah? So of course there's no guarantee that a low forms in this region here, in this blue zone. But what is that blue zone for actually? $111,350 to $112,447. That is the ideal target area. The ideal target area for such a decline, for the C wave. So with an ABC structure, a structure like that, it looks like a flat correction where we have an A wave down, a three wave move up in B, and then 5 waves down in C. It's a so-called flat correction. And in that flat correction, wave C of B was supposed to land in this region. And then if we get an impulsive reaction to the upside, yeah, we need a break above 113,529 to 113,919 to signal that a low is in. Why? Because this is the resistance area for a fourth wave. I cannot rule out another low here. I think it's quite likely. It's just that this here was already a possible 4-5 where we nearly reached resistance. We don't have to reach resistance, you know, but I mean, now we've reached the 38.2 Fib level. So all I want to say here, there is no confirmed low until we get a move up above resistance, and ideally even a 5-wave move up, because if we don't get 5 waves, the risk is that this is turning into a broader ABC structure. So that should give you the relevant levels here. I mean, we also shouldn't ignore, we also shouldn't ignore that Bitcoin is currently in a CME gap area. So a little bit further downside to close the gap would probably even be welcomed, because it would get rid of this CME gap, which is around $111,160 is the lower boundary. And then we have more Fibonacci support there. So I treat this here as a B wave pullback. I explained that in yesterday's video. And this B wave pullback could of course extend, and as long as we're holding above $108,670, the structure can still take us to $130,000. So this is the support, 108,670, that needs to hold to support a rally to all-time highs. Doesn't mean we have to test it, but it's the level that should hold to keep the bullish perspective alive. So even if this here turns out to be the A wave, then maybe we get a broader B wave. I mean, today really you have to be prepared for different outcomes. You always have to be in crypto, but today it's Fed day, so expect a lot of volatility. Then, you know, from down here we could start again, yeah. But below 108,670, while this is not an invalidation point, this local structure will become far less likely, and we have to talk about alternatives. But this is just, basically pre-Fed decision video. I wanted to give you an idea of the relevant levels. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in additional updates, I suggest that you also check out our X channel for additional charts, updates, news, and much more. There are even some video updates here, for example, that you won't find on YouTube. For example, the gold Bitcoin chart and so on. Or Bitcoin gold it is rather. So check it out. I'll leave a link in the comment section. Thanks so much. Bye-bye.